Thanks for letting me moderate the panel today. I think Bitcoin is fascinating, and it's a little bit, when you're looking at the community that's using it, it kind of feels like a William Gibson novel sometimes in terms of ideas being viral and trying to get people to believe in something. So it'll be interesting to talk about it today. We're going to start out with a kind of economics lesson. Susan Athey is a business professor, professor of economics here at Stanford Graduate School of Business, and she is just going to give an overview of the kind of economics behind Bitcoin. She currently serves as a consultant at Microsoft in an economist role there. So she, has a foot in academia and a foot in the business world, and I think it's going to be a really great start to just give us a foundation for thinking about Bitcoin.
Thanks. I'm delighted to be here today, and I'm really excited for this terrific panel. So I just wanted to open up with a few remarks to kind of frame the discussion today. Virtual currencies have passionate advocates and, of course, detractors, but you often see articles in the press tending to focus on just one aspect at the time. So I wanted to lay out sort of 4 different lenses you can use to think about virtual currencies. The 4 lenses I want to talk about are, first, as a store of value or a way to hedge macroeconomic risk. A second is as a ledger that can be used for frictionless commerce. A third is anonymous transactions. And the fourth is a possible replacement for our current official government currencies. So starting with the store of value, of course, one aspect of Bitcoin that got a lot of attention in the press recently is that it might be a good way to hedge against inflation risk. We have all these governments facing fiscal crises, and they have the incentive to print money, so maybe you can store money there. And of course, if you think that other people are going to want to do that, you think that it might appreciate, and so you might even want to speculate in Bitcoins. And so there's a lot of discussion about whether this is tulips or a Ponzi scheme or something else. Of course, the instability in the prices caused by all of this speculation might make you think that it's maybe not such a good store of value after all, and that could undermine its use in that way. So a second way to think about Bitcoin is that it's sort of a secure ledger. So to think about this, imagine there's 2 ways you can conduct transactions. One is dollar bills, but every time you use one, somebody takes 2%. Another way is that you can get a seat at a table. Say there's 100 seats at a table, and if you're at the table, you can transact with other people at the table for free. So you can think, how much would you pay for a seat at that table? Well, it might be 2% times the dollar value of transactions that you would do on this system. Of course, if there's only 100 people on the system, it might not be a lot of transactions, so you might not be willing to pay very much. But now just imagine that you can actually divide up those seats very finely, so there's really no limit for the number of seats at the table. Then you might imagine that you would have lots more people to trade with, and you could trade with them for free, and so it might be worth more and more for you to be at the table. On the other hand, you can keep dividing up the seats to bring more people there, so we can settle into sort of an equilibrium price for the fractional seat. This is one way to think about how much should a Bitcoin be worth, and then you basically think about it as, well, how many transactions, what's the dollar value of transactions going through the system, and how fast can you turn over these coins, something about the velocity of these coins, and that can tell you something about the value of a Bitcoin. If you look at it that way, then actually the current prices aren't really out of whack. They kind of make sense from the perspective of how many transactions have been going through the system. Once you think about it as sort of just a ledger, you also realize that actually you don't really have to worry so much about belief in the system. If it's easy to get money in and out of the system, then you only need to believe in it long enough to make your transaction. Of course, if there are frictions getting in and out, then you're going to care more because you're going to leave your money there for longer. And I did a little experiment where I went out and tried to buy Bitcoin a whole bunch of different ways this spring, and I'll tell you right now, there are frictions. It's a little shaky, it's a little scary. You're sending a picture of your passport to some crazy bank and all of your bank ID numbers and so on, and it's definitely not for your grandmother. But also once you realize that you can make transactions without dealing with the traditional system of banks, you can think about these virtual currencies as possibly disrupting existing banks, putting pressure on their fees, maybe disaggregating some of their services, unbundling, similar to what happened in newspapers and so on. So third lens through which to view virtual currency is the anonymity, and that's gotten a lot of attention. Of course, there's been a lot of illegal activities and money laundering, which has actually caused problems for some of the early exchanges. But actually, public virtual currencies could have the opposite effect. They could make things less anonymous than today because the government could have a record of every transaction, which brings us to our fourth lens, which is, well, could this be actually our official government currency, which would then maybe put Bitcoin and everybody else out of business? Some prominent macroeconomists have been pushing hard for this as a way to solve certain macroeconomic problems. Japan has been pushing the zero lower bound for a while. The problem is that you cannot get people to go out and spend money in Japan. They want to hold on to it. They think the money will be worth more tomorrow. If currency is virtual, you can tax the money. You can basically tax people from holding it and force people to get out there and spend, which can stimulate the economy much more effectively. So people have been pushing countries like Japan should adopt virtual currencies for that reason, and also to adopt, to make it more simple to enforce taxation. So it can become the anti-anonymous phenomenon rather than the anonymous one. So there's doubtless many other ways to think about virtual currencies as well, but those will come out as you guys hear from the panel and ask them lots of great questions. So I'm looking forward to a great panel. Thanks.
All right. So the reason why I wound up here moderating this panel is I write about the intersection of privacy and technology. So I write a lot about how we're tracked online. For the last couple of weeks, I've been writing more than usual about the NSA. And I got interested in Bitcoin because of it offering this opportunity to be able to buy things online anonymously, or at least without handing over a lot of data about yourself. And there was a lot being written about Bitcoin by various journalists. Some journalists were talking about how hard it was to buy it, the kind of shady transactions where they meet somebody at a coffee shop and give them $500 and then they give them some Bitcoin. And I wanted to really understand the currency from a usability standpoint. So I decided to try to live for a week on Bitcoin, and I did that at the beginning of last month. I tried to buy my Bitcoin through Mt. Gox at first, but Bank of America wouldn't let me send funds to their account in Japan. It said that they weren't going to allow me to do that. So I ended up buying my Bitcoin through Coinbase, and I bought 6 Bitcoin, and then put my credit cards away and my cash away and lived for the week on Bitcoin. I ended up losing 5 pounds. I had to walk. The first day I had to walk everywhere because I couldn't put Bitcoin on my Clipper card. Uber didn't take Bitcoin. I couldn't find a car sharing service that would accept Bitcoin, so I walked to work. I finally was able to rent a bike from somebody for 0.25 Bitcoin. It was hard to find food. When I started, there were 2 restaurants in San Francisco that took Bitcoin. The famous Cupcake Shop. And maybe there's somebody here from it or a fan of it. And a sushi restaurant that's right near Internet Archives. And so I thought I was just going to have to spend the whole week, eating sushi and cupcakes, which wouldn't have been so bad, but I was able to find a food delivery service that acted as an intermediary, and it's called Foodler, and so I put a bunch of Bitcoin there, and I was able to order from regular restaurants. But in a bad bit of timing, this was the week that my rent came due, and so I contacted my landlord who's in Brazil, and I said, hey, would you be willing to take Bitcoin this week? And she had no idea what I was talking about. I was like, I don't know, maybe it'll be easier to use than US dollars in Brazil, for all I know. But she wouldn't accept it, so I ended up following the rules of my week. I moved out of my house, and I moved to 20 Mission, which is a kind of, they referred to it as like a hacker workspace, living space, but it turned out to be a kind of under construction hostel. And there were chickens on the roof and like construction equipment in the hallways, but I lived there for a few days. Anyways, it was an interesting experience. Like, I survived the week, but it was very difficult. I thought about I was blogging it in real time, and I was thinking about putting all the entries together and then just calling it the Bitcoin diet, but I haven't done that yet. So I'm just going to introduce the panel, and then we have one more little presentation from the last person I'll introduce. So starting off here, we have Tyler and Cameron Winklevoss, who came out publicly as big Bitcoin owners in the New York Times recently. They own 1% of the current Bitcoin market. They are also, they run a private investment firm, and they've invested in BitInstant, which is one of the Bitcoin plays out there right now in the investment space. A lot of Bitcoin startups have been getting lots of funding recently, including, I'll skip over Wendy for a second, Fred's at Coinbase. He is another Blue Devil. Susan's also a Blue Devil, so we have like a big Duke representation here. And I actually interviewed Fred during the week that I was living on Bitcoin, because his office was within walking distance on that first day.
Thankfully, I caught you on day one as well, right?
Yeah. And so Fred's right in the Bitcoin startup space right now. And Wendy is sitting in between there. Wendy is at Silicon Valley Bank, and she'll be able to give us the perspective of kind of established, from the banking establishment. They do have a few Bitcoin companies that are banking with them. She specializes in compliance, so we're hoping that she can give us some insight into regulatory challenges that Bitcoin companies and Bitcoin itself is going to face. And at the end, we have Chris Larson from OpenCoin, which started Ripple. Chris has been in kind of the e-commerce space for a long time, and I'm going to turn it over to him just to talk about Bitcoin and Ripple.
Great. Thanks again for having us. I was asked to give a brief introduction of what we call the math-based currency movement. So that includes both Bitcoin and Ripple. So let me just spend a couple of minutes, and hopefully this slide mover will work. So really quickly, what is this movement all about? We call this the math-based currency movement, distinct from what you would call the virtual currency movement, simply because virtual currencies might include things like Zynga dollars and Amazon coins, and frankly, those can be debased just like political currencies. So the idea behind Bitcoin, this whole entire movement, was how do you create a currency that's not based on a central authority that can destroy the stored value of a currency. The problem you're trying to solve is the erosion of trust in political currencies. The solution is, can you build a new currency that has nobody at its center? So it's simply based on a math relationship of, let's say, servers in a distributed protocol. So the analogy would be kind of what gold is. When you think about why was gold a currency, it's because there's nobody behind that either. It was simply a math relationship of protons in a gold atom. And that's the idea here. So a single amount, none more can ever be created, fundamentally deflationary currencies. That's where this all began. So I think probably safe to say the two major iterations of this math-based currency movement are, first of all, Bitcoin. It's the one that started all this. An incredible technology. It's really been the inspiration for everybody. Started in 2009, sort of as we were coming into the height of the financial crisis. The idea behind it is there are a single amount, 21 million, that will ever be created. They currently trade at about $100 per Bitcoin, so basically 1/100th of a Bitcoin per the dollar, about a $2 billion market cap. It is a payment system as well, but it's a payment system only for Bitcoin. And Bitcoin does rely on central exchanges to make the foreign currency translation to other political currencies. It's also the way you get sort of cash in, cash out of the system. Ripple was launched this year. We've been building it for about 2 years. There's 100 billion ripples that will ever be created. Again, none more can be created. Trades currently at about 60 XRP, that's the other name for Ripple, to the dollar, so about $1.5 billion market cap roughly of the ecosystem. It's a payment system as well, but it's a payment system for any currency, which I'll get in a moment, we think is kind of the bigger opportunity here. We don't need central exchanges in the Ripple system. There's actually a distributed currency system built into the protocol itself. What you do need, though, are gateways as sort of the cash in, cash out mechanism. Let's see if we can go here. Okay, so both of these systems, whether it be Bitcoin or Ripple, of course, the big technology challenge is, well, how do you confirm transactions when there is no central authority, right? There's no PayPal here, there's no Visa or MasterCard to approve transactions. So how does that happen if nobody's in charge? That's a really hard problem to solve, and that was one of the incredible things about Bitcoin is they solved it in this amazing technology called mining. Mining is really their method of confirming transactions. The way it works is basically a bunch of really fast computers run by people are competing to solve a mathematical problem every 10 minutes or so, or on average every 10 minutes. The fastest solution sort of wins the pot. Currently they get about 25 Bitcoins as a reward for that. So that does take about 10 minutes, and that's maybe one of the things we think can be improved on that system. 10 minutes on average is a long time. In the Ripple system, we have a different method of solving the confirmation problem, or what we call the double spend solution. We call it consensus. Basically, Ripple is a global ledger. That's why you can have multi-currencies in there. The process of consensus simply means when the majority of servers that are validators in the network reach a consensus, then a transaction can be approved to be added to the ledger. And what happens is servers will have different, what we call unified node lists, which are basically groups of servers you're watching. Different validators might have different node lists, but the way it works is you sort of get a hairball of different node lists that are intersecting. So it's sort of mathematically certain that the entire network will reach consensus. That's the whole idea. Both systems are peer-to-peer networks, so the way to think about these, again, they don't run on no central servers controlling them. That's the whole point here, right? So no central authority can debase the currency or change the ledger of the payment system. So both are peer-to-peer networks wired together through a common protocol. And as you can see on the bottom, anybody can build an application on top of them. That's the beauty here, right? Anybody can take Bitcoin today or Ripple today and build an entire banking infrastructure on top of it, really without anybody's permission, without the need to pay anybody any money, and without fees being collected. So they're free payment rails for e-commerce, basically. So the benefits you get, totally global, basically free, irreversible, so it's like cash, and fast. Obviously a good thing. The players in these markets and how they're regulated, a lot of new regulations are coming down today. We can probably talk about that in depth. But it looks like things are breaking into these 4 different categories. Users, which are buyers, sellers, merchants, private market makers. It looks like the regulators, at least in the US, and that's kind of the key regulatory structure globally for this industry. It's okay now to use these virtual currencies, math-based currencies, for goods and services. That's a pretty big step. That just happened in March. Second, exchangers. Obviously, that's going to be central exchanges, which are exchanging for other people. If you're exchanging for yourself, it looks like you're going to be in the user category. Administrators, that's a weird category that seems to only be capturing miners, Bitcoin miners for some reason, and that might change. And then finally, at the end, we have the prepaid access regulations that apply to gateways. Again, gateways are important to note, are only moving existing currencies onto these math-based ledgers. So they're really operating just the way you'd expect PayPal to operate. So where does this all go? Kind of 3 outcomes here. I mean, it started as a protest movement, sort of. The original people behind Bitcoin are still anonymous, and it was really kind of in some ways a reaction to the financial crisis. So is this going to remain a protest movement? Is it going to be like Occupy Wall Street? Is it going to have the same outcome and kind of know what happened there? Or is it going to be something more than that? Is it going to be ending up as e-gold? A lot of people are looking at this really as a way of storing value, as distinct from paying for things. It could certainly go there as well. That's sort of interesting. But we think by far the bigger opportunity here is this is an opportunity to flatten finance. If you really look at it, the world we live in today is a completely wired global marketplace. Everybody, no matter where you are, has access to a global marketplace if you have the internet. That's incredibly powerful. The problem is payments don't work that way. 20 years into the internet and finance has not changed. It is still the old broken, fractured, country-by-country system that it was 20 years ago. And that is a huge drag on the global economy today. So the opportunity here, what math-based currencies really are, I think, are the way finally to align payments to work the same way the global commerce market works today. That could add billions of people to the global economy. It would save hundreds of billions of dollars. That's the big opportunity here, and that's the thing we're most excited about. So basically, can you wire together all these fractured payment systems? Can somebody using M-Pesa pay somebody through ACH or through SEPA? And if you can do that, then basically, oops, went too far, you basically have HTTP for money. I think that's what this is all about, but we kind of don't know yet. Thanks.
So anyways, I just want to start with a kind of softball question here. Why use virtual currencies? Why is Bitcoin or other virtual currencies better than using the US dollar or a sovereign currency? Maybe we want to start. Fred, I'm going to put you in the hot seat.
Okay. So I would argue that a lot of it is about staying in this frictionless payment world. What Bitcoin and virtual currencies, broadly speaking, do is they take what is normally a financial system that runs across often inefficient rails and makes it purely peer-to-peer. It cuts out middlemen. You think about the average use case of a merchant accepting payment. Credit card is sort of the base case. A merchant is paying roughly 3% away to credit cards, and in some cases much worse, just to collect payments. You think about what happens when merchants are no longer paying away this 3% to all the payments they're taking in, and all of a sudden businesses can exist where they simply couldn't before. It's sort of what the internet did for the cost of distributing data. It brought it down by an order of magnitude. Digital currencies are doing the same thing. And again, as with the internet, there are now businesses that can exist that couldn't before. Digital currencies are doing the same thing, in that they're sort of wiping out these efficiencies. They happen to be in payments across the economy.
And for consumers, what's the kind of draw of Bitcoin? I mean, I see the business case, but how do you get people to start actually wanting to pay for things in Bitcoin?
Yeah, I mean, it's a bit of an interesting problem. I think what has actually happened is you get these sort of early tech enthusiasts, as Chris mentioned, sort of people maybe with political leanings as well, who become the early adopters. And that's where the entire sort of cycle starts. I think what will become increasingly common, and I believe this has already happened in a couple states, is the lines will get blurred between who absorbs these payment costs. It is now illegal, I believe in some states, for credit cards to bar merchants from passing those payment costs along to consumers, and I think that's a trend that will only increase. So I think the common response to this now is, it's so convenient for me to pay with a credit card. Why would I even think about paying with something else? I think the reality is those costs will be passed along to consumers, and people will become more aware of those costs as time goes forward.
And when you're saying those costs, can you talk about exactly kind of the percentages, the fees that we're talking about?
Yeah, so again, base credit card fees are in the realm of 3%. Virtual currencies are obviously free, and then if, in the current state of virtual currencies, if you'd like to cash out, we charge 1%, just to give sort of some base of comparison. And then there are obviously use cases where payments are much worse. You think about a $1 transaction on the internet, something like that, where a base credit card fee is on the order of 20 cents. All of a sudden, 20% of the purchase is going straight out the door in payment processing, which is rather ridiculous. You think about other sort of intense use cases, things around foreign exchange fees, things around two-sided marketplaces where you're incurring these payment costs twice that can really be pain points.
And other things that you would point to, because it seems like 2% is not, it's considerable, but I don't know if it's big enough to get people kind of moving into this kind of strange, complicated new currency system. What are the other things, and other people can hop in here, that you would point to as making people want to use a virtual currency?
Probably the remittance industry, which can be anywhere from 10 to 20% if you're transferring money across borders.
think also the speed in terms of if you take a scenario where you need to get money across borders, let's say you lost your wallet, you're overseas, and it's Saturday, you're sort of out of luck till Monday at least. And I think that Bitcoin, because of the reduced friction, reduced pain points, allows you to sort of solve that problem much quicker. And I think, as Fred was talking about the micro payments, there's lots of situations where we might want to give small donations, let's say, or we're reading a piece of content that we like of a blogger that asks to donate, and we might want to give 10 cents, but right now that's just not feasible. And so I think that in terms of content, there's sort of been a democratization where people can now sort of create their own and have their platform, but they can't really accept payment or donation for that. So I think those are two possible cases where it makes a lot of sense.
Tyler and Cameron, I'm sorry to do this to you, but I bet it happens a lot. Do you want to just make sure we all know who is who? Tyler, the closer here, and then Cameron.
Cameron.
Second there, just so you know.
A pop quiz
I'm
at
Tyler.
the end.
Does it make a difference? Is it?
We're played by the same actor, so whatever.
There's this great quote. It was actually the Wall Street Journal article about Coinbase getting its $5 million round of funding from Union Square Ventures, and they quoted Y Combinator's Paul Graham, and he said that hackers are like animals in that they have this sense when a storm is coming or an earthquake is coming, and they don't know why they know, but they just know. And he said, you know, hackers are excited about two things right now, and they can't really articulate why, but it's 3D printing and it's Bitcoin. So I'm just wondering if the panel can speak to that articulation that hackers are apparently not capable of. But why are people excited about Bitcoin? Like what is the disruption of the market? Who's going to be disrupted? What are the kind of big impact? What's the big impact that we're going to see?
I think it's, to answer the second question first, it's all the people in the world currently who provide inefficient payment rails. I think the reason that hackers are so excited about this is it disrupts an industry, namely finance, that for a number of reasons, regulation has been very difficult to disrupt, and then all of a sudden you create a financial system where if you own your private key or your password, to use less technical jargon, you own your money and you don't need a bank. You can send money anywhere in the world virtually instantly with almost no fees. No, you no longer need Visa, you no longer need Western Union. And I think that's why people are so excited about it. It lets you build so much, and something that finance is something everybody has to use. And it just opens that world up to everybody in a purely peer-to-peer manner, which lets somebody with just a computer, just a hacker, build something extremely powerful in today's world.
Kristen?
You know, I just agree with that. I think people are realizing now that this is much more about the payment system. And I think people have realized over the last 20 years, you just can't really change finance in a central kind of paradigm, a central server, a centralized company. You're just going to get bent by the powers that be. The incumbents are too powerful. The regulations are too tough. That's why you don't see a lot of innovation in fintech coming out of Silicon Valley. Surprisingly little, given how huge this market is, given the amount of friction, the amount of time that we spend on games and entertainment in this valley, and then we ignore things like fintech. I mean, it's shocking. So what the beauty here is for like the first time, a distributed system in finance, this really could be the final game changer. And if that's true, the amount of money you're talking about saving the world, and the amount of money people that can come into commerce is just enormous. So I think what you're going to see is, we talk about why do people here want to use Bitcoin or Ripple. Maybe the early use cases aren't so powerful here. We have a lot of options. But people in Africa, in India, in China, who are left out of the marketplace, that's where you're going to see, I think, the big use. And you may not even see it in like the word Bitcoin or Ripple. You're just going to see a lot of developers building on top of these rails. It might be totally invisible. You just know that it will suddenly be available. Just the way Google became, and imagine if Google had to go ask the New York Times for permission to start a search business, right? It never would have happened. if they had worked through the existing rails of news. They could only do it because they had these new rails of HTTP, and that's what this is. So anybody can build on top of it.
Wendy, as a voice from the kind of established financial system, what do you think of Bitcoin? Do you see it as being extremely disruptive to existing companies? Is Western Union doomed?
It's disruptive to the brick and mortar financial services. Obviously, it's competing with banks. It's competing with payment processors, credit cards, because it's borderless. It's frictionless. There's no cost associated with it. But at the same time, I think the way our bank views it is it's exciting innovation. A lot of our companies are the VCs and private investors back these types of industries, whether it's payments or Bitcoin, which is the new hot topic now. So I think I see both sides. The regulations is always going to be a big part of it, as we recently found out with FinCEN, the regulators who implemented the change back in March. But I think that's just the cost of doing business. And I think right now in the industry, everyone's trying to get an understanding, as well as ourselves in the bank, of really what is this industry all about and where is it going to take us. So.
And I guess that's a good time to get into regulatory concerns. Which Bitcoin companies need to be worried about that? Who's having to interface with the regulators? There was the letter from FinCEN in March that kind of gave Bitcoin the thumbs up as long as people are registered with the proper authorities. What's the outlook moving forward? How concerned are Bitcoin businesses about regulation?
Yeah, that's actually a good topic. I don't think companies should be afraid of regulations. FinCEN, I was talking to the FinCEN director, they welcome innovation, and their stance, even though there's a lot of publicity out there, is not to shut down Bitcoin companies. It's just to make sure that we're abiding by the rules. And I think as long as you abide by the rules, you register as a money service business, you're upfront with your bank in terms of transparency, knowing your clients, the pure basic infrastructure, then there's really nothing to be afraid of. I think there's a lot of people that are gun shy with the recent Liberty Reserve and the Mt. Gox, but fundamentally it has nothing to do with Bitcoin. It has the fact that they didn't abide by the regulations. So it could have been anything. It might not have been a Bitcoin company. It could have been the fact that they are a Western Union and they didn't register. But I think it's the fact that it's Bitcoin that's creating a lot of publicity in the news.
Fred, how's it been dealing with regulators at Coinbase?
It's been fun. On a more serious note, though, I completely agree with everything that Wendy said there. I think this is sort of an inevitable thing. Frankly, I think a lot of people view the increased focus on Bitcoin from regulators as a very positive thing, just because of perceived legitimacy. I think it was inevitable that Bitcoin, assuming that we all want it to become legitimate, which we do, will be viewed as an asset that you need to treat in the same way you would treat dollars if you were a business that were moving dollars around. And that's obviously something that we value and see as a high priority at Coinbase. And frankly, I see that as a key to success for any Bitcoin or alternative or digital currency, company. Because we are sort of, we're in this world where we're straddling the traditional financial world, traditional banking methods, however you may get fiat currency into whatever digital currency system you're using, and this brave new world of digital frictionless payments where things are obviously scary. It's peer-to-peer. Obviously Bitcoin is not anonymous, but in its current state, it is sort of pseudo-anonymous. And I sort of see it as our job as the early companies in the space to try to do everything we can to make regulators comfortable and educate them when we can, as this is fundamentally a more efficient payment network. and one that should be embraced, and hopefully one, it doesn't look like it's going this way, but one that is not to be feared.
I think as an investor, I think a lot of people were sort of sitting on the sidelines waiting for some sort of guidance, and I think that while regulation in some ways people sort of loathe or are worried about the fact that it might sort of halt Bitcoin to some extent, I think in reality what we've seen so far is that there's not really a motivation to sort of quash it or stop the innovation. And I think it's actually giving clarity for entrepreneurs and investors to sort of be a lot more comfortable moving into the space. So I think actually it's a net positive, and it's going to only help the space mature quite a bit.
Yeah, I think it's actually positive as well. It seems like the message from Treasury is probably the biggest, most important regulator right now. But it seems like the message is pretty clear. People should be compliant, but they seem to be saying that they understand the potential here, which is really good. So I think you definitely have probably at least a year for the sort of an industry to develop. You might have some self-regulatory organizations cropping up. I think there's a lot of movement in that direction right now, and I think that's probably a really good thing. The other thing you have is you have the industry itself moving from kind of the purist, ultra-libertarian to, kind of how does this fit into global commerce, and how do incumbents work with it? So there's a shift going on there too, and it seems like from the U.S. in particular, the folks here in the U.S. businesses seem to be trying to work more with regulators. It seems like in Europe maybe it's a little bit more libertarian. There was a pretty good article in Financial Times over the weekend on that. So there's a split going on for sure, but it seems to be in a pretty constructive place right now.
So if you guys could hop in a time machine and go forward 50 years, what do you think the currency landscape is going to look like then in terms of sovereign currencies and virtual currencies? What do you think the state of Bitcoin will be at that point? There should only be a few more million of them floating around.
I know, but I'm not going to tell you. No. I see a country pegged on a math-based currency. It's hard to know whether it's Bitcoin or Ripple or XRPs or something else, but I think that the math-based currency movement as a whole, I think it exists in 50 years.
So is there going to be one country that is the Bitcoin, the Bitcoin state that is all their citizens are using Bitcoin?
Probably one with the most fiat fiscal mismanagement. So maybe Africa has some good candidates. Iceland seems like a good candidate.
It's hard for a country to adopt a deflationary currency. As a deflationary currency, they work really well as lubricants to payment systems. As something a country would adopt, the reason countries can't accept deflationary currencies, you sort of bankrupt all your citizens who have liabilities. So the beauty of Bitcoin and Ripple, though, is like there are no liability holders; they're all asset holders. And unlike kind of digital money that's fiat money, which is always sort of an IOU or a claim that you have counterparty risk. You actually don't have counterparty risk in Bitcoin or Ripple, and that's kind of the cool thing. So it's just an asset that exists in a distributed protocol. So it functions really nicely that way. But it probably then, these things have to be complementary to existing systems. So again, we don't have to be killing the dollar or the renminbi or the euro. They just complement the existing system. So maybe globally, the math-based currencies are like the Singapore dollar, like in that amount, that international, and have their place. That would be a good outcome.
Yeah, I would tend to agree with that. I think the most likely scenario for a country adopting a virtual currency is one that happens out of necessity rather than out of actual mandate. So picture a second world country where technology is relatively widespread, at least smartphones or even SMS, because hypothetically you can build digital currency on SMS. I didn't think what I was saying was that dramatic.
Boring.
But
I think somebody might be leaning on the ledge.
there we go. Okay. Maybe this is a second world country. In all seriousness, though, I think there is a realistic scenario where the first country to adopt a virtual currency is one, again, second world country where there's some kind of massive economic event, maybe an inflationary spiral that occurs, and the country is sort of left with two options. One is bartering in the street. The other is adopting a virtual currency, which I would agree with Chris. It's difficult for a country to fully adopt a deflationary currency. There can be debate around that, but I think it would be hard. And whether or not it actually is hard, I highly doubt a country would voluntarily do it. So I think that'll be the first adoption wave. And I would say it's safe to say that in 50 years, at the very least, at sort of a broad asset management level, I think people will be holding 5% at a minimum of their portfolios in a virtual currency just for macro hedging reasons.
I think that it's definitely, I think I agree in the sense that there's probably going to be a situation where some country runs itself into the ground, or a state where virtual currency becomes sort of the de facto currency. But in terms of sort of the US, for example, I think the alternative of having a math-based currency, I don't see it sort of killing US fiat or something like that. But what I find sort of really fascinating about this whole movement or experiment or whatever you want to call it at this point is the debate, and even the panel we're having right now. I mean, I happen to major in economics at college, and I'll be the first to admit I didn't get to every class, but I've definitely thought a lot more about currency in the last year than I have in a long time. And really the idea of money, what monetary policy means to my day-to-day, how a currency is debased, and also having sort of the freedom now to have an alternative. And when you take sort of a cold storage, I actually went into the customs office to try and get a global entry pass, so you can now like put in your fingerprint and walk right through. And I asked the guy, he sort of recognized my name on the ID, and he said, "So what's the next big thing?" And I go, "It's Bitcoin." And he goes, "What is it?" I started to explain it to him, and I was like, you should really think about this, because if I walk through customs with a USB stick with more than $10,000 of instruments, how are you going to sort of, should I declare that? Where does it go there? And then you take that to the brain wallet, where you can sort of cross borders with any amount of money. And I guess it's really, do you declare it not? You have that freedom now. And it really starts this debate, which I think didn't really exist before, which I think is very fascinating.
We're starting to get questions flowing in from the audience. What I encounter a lot when I'm talking about Bitcoin companies is people say, like, are you putting your Bitcoin where your mouth is? So there is a question here for Tyler and Cameron, whether you foresee funding any companies in Bitcoin instead of in dollars.
We were asked that question about BitInstant, and we actually paid in fiat, and it turns out if we had paid in Bitcoin, we would have paid 10 times as much in funding by the price of Bitcoin at the point where we funded BitInstant last September and where it is now. So I'm holding on to my Bitcoin, but my fiat's cheap right now, so I'll just fund in fiat.
That's a real problem, right? Like when I was living on Bitcoin, it dropped. I'd bought it at like 130 something. It dropped to 90 the Friday of my week, and that was the day I was going grocery shopping and buying cupcakes. So I ended up spending like way too much money. I mean, you always spend too much money on cupcakes because they tend to be expensive, but I spend a lot of money on cupcakes. Bitcoin is an unstable currency right now. Like the price is changing all the time. Is that instability ever going to change? At what point does it become stable? Do you want it to be stable?
I think that at what point it sort of hits an equilibrium or it becomes more stable, I think that's probably pretty difficult to predict. But I think a lot of people will sort of talk about the deflationary nature and how people sort of won't want to spend in that respect. And I guess if you sort of hoard Bitcoin and hoarding, of course, is a sort of a loaded term for savings, but if you save Bitcoin to the extent where it's not really being used that much, I think it sort of becomes a self-correcting issue, because a lot of the utility, as we've been discussing, is sort of the payment network, and I think it recorrects down to a price where people probably are willing to use it again. But I think it brings up this question of if you're dealing with a deflationary currency, I think it promotes more prudent spending. And so, for example, if the iPhone that I have, I know that if I purchase that today, and if I wait 6 months, that iPhone's going to decrease in value. but the utility of me having it today, being able to communicate and email and whatnot, is worth it. So I'm going to make that purchase. I'm going to really think twice before I spend my Bitcoins. And so I think that it's an interesting experiment in sort of promoting better consumption.
And a lot of the volatility in the price is really an entrepreneur-created problem. The Bitcoin is sort of ready, but the ecosystem is not quite there. So it's these predictable growing pains of a young ecosystem, and the media and the mainstream attention is almost ahead of it. And so when you look at the exchange situation, you know, an exchange shutting down for 12 hours, you know, if the NASDAQ shuts down for, you know, a couple of minutes, that sends dramatic ripples. So it's just a matter of time before these kinks iron themselves out. And I think that Bitcoin, when you look at currency like gold and the size of gold, Bitcoin, the cap of that is 2 billion. That's not even a drop in the bucket of a currency market or even what the, you know, market cap of gold is. So it's just so young, and there's going to be these growing pains. And I think a lot of the volatility has been confused for some sort of bubble as opposed to a rapid adoption.
And one other thing to add is, again, as the math-based currency movement, as a payment system, you don't really have to even think about these new currencies. So the new currencies, Ripple, Bitcoin, are very interesting, but it's kind of a whole separate thing from the payment movement that this represents. So you can use these systems with dollars, euro, renminbi, whatever you want, Zynga dollars, you know, Amazon coins. They're moving in a direction where they're flexible enough to be able to be used with your preferred currency, which should really increase adoption, right? So a merchant doesn't have to think about the currency risk of Bitcoin or Ripple. They can just simply use them as payment rails in whatever currency they want to accept. That's a really important point, that there are two things going on here, currency and payment system.
One of the reasons why a lot of people like Bitcoin, the kind of political belief in the system, it being stateless, and people really being excited about that. I mean, that is threatening for states that you have a currency that they can't control. You know, at what point would Bitcoin grow to what growth would have to happen for US or China to get upset about Bitcoin and to really crack down on it?
I think this is more of a positioning problem. Like right now, China is that's where we're getting most of our traffic right now in Ripple, and that's happened in the last month. And 3 months ago, you'd have said China would have been the last place. The government would have never allowed this. But it looks like it's sort of happening there. But if you start talking about killing the dollar, killing the renminbi, you know, destroying central banks, you are not going to have a lot of success there. So if you talk pragmatically, I think everybody gets that this is about commerce, and that's a good thing. As far as the central banks, is there really an issue here? There really isn't, in my view. Every country already has to compete. You know, the dollar has to compete with the euro and the yen, and there's already tons of movement of those. So there's no longer a world where each country has its own currency. They're already competing, you know, viciously. So it's no different. It's just a complementary currency within an existing global currency system.
Okay.
Might be a country that is high in deficit, and they're looking for ways of funding, because I think this also brings up a lot of tax issues as well, capital gains, capital loss on revenue generated from Bitcoin profits. So it will be interesting to see where this takes us.
Where do you think the opportunities are right now? I know there are a lot of entrepreneurs in the audience. So looking at the Bitcoin system right now, like, what are the problems? What are the opportunities for people that are building businesses? What could they solve?
I mean, you know, these things are platforms, and you could build entire banking systems on them. I mean, right now, every country could use, you know, wallet applications for, you know, China and India and Brazil and Colombia and Mexico. I mean, incredible opportunities there. People could build entire new sort of remittance companies. You could probably duplicate what Zoom is doing today. It would be way more competitive. So huge opportunity, and it's available now. I mean, you don't need to ask anybody's permission. You can go into the Bitcoin protocol, the Ripple protocol, and you can do whatever you want.
I think that storage is a sort of a scary topic for a lot of people, and one of the things that you know, I find it's not difficult to convince people about the virtues of Bitcoin. It's just really difficult to explain, okay, this is where you buy it, this is how you store it. And Fred, of course, is trying to help solve that problem. And I think once people feel safe storing their Bitcoins and easily in a friendly manner, you know, as soon as my mom can go and buy Bitcoin, she's in the audience, hi mom, in a pretty easy manner, I think that's when it becomes pretty mainstream.
My mom too.
Right. But I think storage is a scary concept, and e-commerce and buying things over the internet 15, 20 years was also scary, and today it's very commonplace. So I think it's a matter of time.
Yeah, it's amazing how people forget how hard or how negative people were on the internet and even Amazon. And it's, you hear the same sort of tape recorder about digital currencies, and it's kind of, I don't know, I think it's interesting. I think in 10 years or 5 years, not even, people are going to see it completely different.
So apparently a lot of people in the audience are asking how Bitcoin and Ripple make money, which I think can be, a question that needs to be split in two in terms of how you make money speculating on Bitcoin or Ripple, and then how businesses that are dealing in these currencies are making money.
So yeah, I guess I'll kick that one off. Speculation obviously is its own thing in any asset, and I don't think that's what any of us are engaged in. Fundamentally, we just charge 1% when people convert into and out of Bitcoin, meaning buying or selling Bitcoin for dollars at the moment, but hypothetically that will expand to other fiat currencies going forward. And I think that's where most Bitcoin businesses collect their fees at the moment. It's a bit interesting for us because we serve as a wallet as well, and we have a non-negligible amount of Bitcoin on deposit. So you can imagine in 5-10 years where this could hypothetically go to a more traditional banking model that somehow leverages that deposit base. But at the moment, and especially given Bitcoin's sort of history around companies securely storing deposits, I think that's a bit of a no-no and not economically viable, at least for the next couple of years.
So there's kind of two layers that are going on here. One are the protocols themselves, the Bitcoin protocol, the Ripple protocol. Again, look at those as public goods. The business model behind the inventor of Bitcoin, who is still anonymous, I guess, goes by the name Satoshi. It looks like he kept about the equivalent of maybe 10% of the Bitcoin's total. Looks like they've never moved, so we don't know what's going to happen with those. You can see them in the blockchain. But that was sort of his or her or their business model. Ripple is being created by a for-profit company called OpenCoin. That's the company I work for. We're sort of software producers. We're making the protocol. Our business model is we're keeping 25% of the XRP that exists, and we'll use that to fund operations, repay investors, pay employees. That's our business model. The second layer are companies that are building around the protocols. They can make money just the way existing fintech companies make money. So, for example, gateways that integrate to Ripple can charge for cash in, cash out, settlement, transfer of payments, just like a PayPal would, for example. So that's unlimited opportunity there.
Okay, just keep sending us questions if it still doesn't make sense to you. But it's an interesting system because of the way that with Bitcoin, you have all these miners that are basically creating Bitcoin in real time, and it's being distributed. And that whole kind of underlying infrastructure is pretty interesting in the way that it's going to change once all the Bitcoin are created, and they'll just become the people transacting in the network. This is something a lot of people are asking about is Bitcoin is designed in a way where there will only ever be 21 million Bitcoin, and maybe it'll be less because there are people like Wired that are buying Bitcoin miners and creating Bitcoin and then just kind of throwing them away. So it'll probably be less at the end of the day than 21 million. How do you deal with that in the future, the fact that it's by design a deflationary currency?
I think that's fine. I did the back of the envelope calculations on this once, and I should probably do it again just for my own sanity. But it's important to note that Bitcoin is subdivisible down to 8 decimal places. So if you market size 21 million Bitcoin to M0 in US dollars, which I believe is around $2.5 trillion, you're still okay in terms of usability by a couple of orders of magnitude. Which would lead me to believe that if you globally market size it, you're still doing fine. So from an actual usability standpoint, I don't think that's a huge issue. Maybe there's some point extremely far in the future where so many of Bitcoin have been lost that it becomes an issue, but I think we're pretty far away from that.
I think there have been, I think, a lot of Bitcoin that are lost and will never be recovered. So I don't think it will actually be 21 million in circulation. I think, though, the key element or key sort of aspect is the fact that it's fixed supply. So whether it's 20 million or 19, and I think some people have estimated that quite a significant amount have been lost or haven't moved in a given period of time. So the actual float and movement of coin might be considerably less than the 11 million that are in circulation or have been mined today. But the fact that, as Fred was discussing, that it's divisible out to 8 decimal points, I think that we'll probably be okay. I was asked if there was going to be enough Bitcoin for sort of everybody in the world, and there won't be, of course, but I think you can devise it out to the point, if there's a situation where there's that many people, maybe we've got bigger problems on our hands.
Yeah. And the decimal point can actually be moved by consensus of all the servers running the protocol. So I think it's kind of irrelevant. And in fact, I think a lot of people debate deflationary currency systems, but in this case, I think it's the simplest system. It can't be gamed. I mean, if you had an algorithm that sort of adjusted the amount by the economic use, in a decentralized system, someone would game that. You couldn't, no central authority to come in and police it. So it sort of has to be like this. And in fact, we think it's an advantage because it's actually an incentive to overcome the inertia of using other systems, right? It's actually good for asset holders. So I think it works.
Yeah, and one other important point that Chris brings up as well, all of these sort of, the vast majority of these fundamental principles of digital currencies can be changed by consensus in the network. So hypothetically, somebody correct me if I'm wrong here, there can actually be more than 21 million Bitcoin should 51% of the network agree that there should be more than 21 million Bitcoin. It's purely democratic. Democratic here in the sense of the miners specifically in Bitcoin, the people who contribute the computing power to the network can make these decisions.
So even though it's stateless, there's still a kind of, I mean, you're talking about consensus, you're talking about the network, there's still a kind of governing body here, right? Like there isn't a Ben Bernanke, but there is a kind of Federal Reserve equivalent. I mean, how would you explain that to people?
Yeah, I mean, it's a bit interesting in Bitcoin at the moment, right? It's still a small enough community such that there are these what are called mining guilds, effectively these groups of miners who combine and syndicate their computing power such that the Bitcoin payouts that you receive from mining becomes a more predictable cash flow stream because they're investing in the hardware to make all this happen. But yeah, I mean, one could see this going a number of different ways. I think what will happen is the Bitcoin network is already so large. I believe the computational power of the network is already bigger than the 100 biggest supercomputers in the world combined, and obviously growing by the day, especially with the rapid iterations in hardware specifically tailored to contribute computing power to the network that we have already reached, and I think are quickly moving away from a point in which any singular organization can really potentially take control. And there are obviously incentives why, even if you could take control of the network, you wouldn't want to.
So what's the biggest challenge, do you think, for mass market adoption of Bitcoin?
Just making it more user-friendly so that your grandmother can use Bitcoin.
Wendy?
I think as it becomes more mainstream, I think there's probably going to be a huge adoption. I don't know. I mean, I think Gift was one of the first companies where they're dealing with, you could take Bitcoins and change into gift cards. I think once that starts happening, it'll become a little bit more acceptable, more popular. Right now, I think with the volatility of the systems and the hacking, there's a little bit of an instability, but maybe it's just new.
Yeah, I mean, all of these systems really rely on people subscribing to the systems in the first place, such that you can remain in these systems and achieve all the benefits that these more efficient payment rails, assuming you stay within the system, offer. So it really is this sort of virtuous cycle of consumer adoption, merchants then getting on board with whatever system it is, and that cycle sort of continuing, because the more people that are in it, the more an individual can stay within the system, the more efficiency is gained.
Yeah, I'd say, again, it's a it's an overall movement, the math-based currency movement, not necessarily a Bitcoin movement or a Ripple movement. So it's kind of which iteration of the movement, whether it be Bitcoin, Ripple, or something new that we haven't seen yet, is going to have the best combination of three things: trust, utility, and liquidity. Trust is sort of in the fundamental technology. It's more trustworthy than existing systems. Utility is it's all about kind of paying multiple currency. Is it fast? Is it inexpensive? What are the cash in, cash out methods? What are the exchange like? Who's accepting it? Liquidity is going to be market makers. Who's making a market in the currency pairs? So it's whatever iteration gets the best combination of that sort of first.
Okay, so there's a mix of kind of like economics questions that are coming in and then basic questions about Bitcoin, so I'm just going to throw them both at you. One is, on the basics of Bitcoin is, people are asking what's the math that miners are doing?
Anybody? No.
I definitely
They're
don't.
hashing using a hash function, and I don't know, they're using SHA-256, but
It's basically a really difficult math problem.
Yeah, they're effectively, so there's what's called a block in the Bitcoin network. One of these is formed every 10 minutes. It's an updated ledger history of the entire network, a snapshot, if you will. Effectively, what's happening is these miners are taking all of these smushed transactions, if you will, that go into a block, iterating on them rapidly, and they're trying to find a solution to this hash function which is sufficiently close to an answer. The way this actually occurs is there's, I believe, a 64-digit hash answer, if you will. The preceding number of zeros on that is dynamically adjusted by the network, and that determines how difficult the problem is to solve, i.e., I guess it's more leading zeros is what would be? It would be harder, I guess. I think there are 7 at the moment, usually. Anyway, long story short, people iterating on a hash function to get sufficiently close to an answer.
This is always one of the challenges, I think, for Bitcoin adoption. It's just that it's hard to explain. It's a complicated currency.
Yeah, I mean, you can think about it like a lottery, effectively. A bunch of computers are churning away at a problem. One will solve a problem or come up with a number that's sufficiently close to the answer. But yeah, it's obviously complicated.
one thing about hashing or solving that problem is when doing it, they're taking the existing blockchain and then the new sort of most recent transactions and splicing them together to find a nonce. And then once they found that value that sort of basically spits out the correct hash value, then all the other miners come in and confirm it. So it's not, I mean, yes, they're solving this sort of lottery and this problem, but they're also having to audit the network and use proper transactions, because if they don't, then the other miners coming in to confirm their work will reject it, and then they won't be able to effectively win the block reward and get the newly minted Bitcoins. So the process of mining, it's sort of simultaneously miners act as sort of the record keeper and the referee of the network and the transactions to avoid the double spend problem. Now, Chris might have an interesting viewpoint because in Ripple, you guys already mined. So effectively, you've sort of gone after the double spend problem from a different angle.
That's right. So mining is just a method of solving the double spend problem. There are other ways to do it. Obviously, Ripple does it in a different way. And you know, part of the reasoning behind that was we sort of felt mining was kind of wasteful. So, interesting stat: the amount of electricity spent on mining bitcoins is equivalent to what would be required to power 40,000 California homes, which is kind of weird when you think about a digital product needing to burn that kind of electricity. So there are other ways to solve the double spend problem. We hope what we've built is one of those, and maybe there will be future ones coming down the pike.
So one of the nice things about Bitcoin for businesses or vendors is that, you know, the fees are less, and there's no chargebacks. You can't reverse the payment once you've made it. But that's also a problem for people that own Bitcoin, and also that their Bitcoin can be stolen, and they don't have a credit card or a bank to protect them from that. Is there, you know, place for some kind of insurance to be created around Bitcoin? What would that look like? How would it affect transaction cost?
Yeah, so that's stuff that we're all thinking about. You know, Bitcoin, Ripple, whatever. These are all low level protocols, which Just like email, SMTP, right? You take Gmail, Hotmail, these are all the service layers that are consumer friendly that sit on top of these low-level protocols. I see Coinbase in the same way as a layer sitting on top of the Bitcoin protocol. So those are all services that we very conceivably could build. I'd like to build a lot of the ones you actually just mentioned. Who knows what will happen with chargebacks in the digital currency world. By nature, a lot of these systems have no built-in chargeback mechanism. They're irreversible payments where, there could come a day where regulators say, hey, due to consumer protection laws, there has to be a chargeback mechanism, effectively what would look like an escrow system sitting on top of these digital payment rails. I think that's probably an inevitability, whether it's for the benefit of regulators and following regulatory rules, or it's simply because consumers and merchants demand it. I can sort of foresee a system in Coinbase specifically where our merchants can set different stringency levels. One might be once a payment is made, it's final. That might be a strict one where the merchant has a sort of a rating, just like you would see on Amazon.com. Where it's sort of up to the consumer to trust the merchant based on their past history. You can imagine a completely opposite example where we hold all funds in escrow until the consumer gives the go-ahead to release those funds.
And Fred, there's some confusion in the back about what double spend means exactly. So can you just explain that?
Yeah, double spend is sort of the fundamental problem that all of these digital currency rails is attempting to solve. And the fundamental innovation here is how do you make a transaction occur without a trusted third party, which the traditional financial world sort of has built in naturally because there are a lot of middlemen effectively, and the systems are just built that way. When you go and swipe your credit card, you can perform a chargeback there. But specifically in the technical sense, a double spend is somebody in a network sending money to two different places. And what they're attempting to do is make one person feel as if they've received a payment, while in reality, the originator of this payment has sent it to two different places, letting different people on the network know about the payment at different times. So hopefully they can dupe one person into thinking that they have been paid, when in reality they might be receiving goods in return. When in fact the coins, using Bitcoin as an example, have gone somewhere else. The way that's solved depends on the network. Ripple uses consensus. Bitcoin uses what's called proof of work, which is what occurs in mining, which relies on sort of computational difficulty and thus probability of a double spend not having occurred.
There's a question to Tyler and Cameron. Just why did you guys decide on Bitcoin? Why do you think it's why Bitcoin? Why now? Why did you choose BitInstant?
So we actually first learned about Bitcoin about a year ago. We were on vacation, and a fellow from Brooklyn approached us. We realized we had friends in common, and he started talking to me about digital currency. And then when I got back stateside, he pinged me again and sent me some material, and I started reading it, and I turned to Tyler and I said, you really need to take a look at this. This is either completely disruptive in a whole way of new way of sort of doing things, or it's bogus, and in which case, never mind. But really, the enormity and the ability of the protocol to sort of change the way money's sent through the internet. I almost like it as like the internet of money, or emailing money back and forth. That sort of struck us as a very powerful thing. And so as investors, we were kind of looking at, do we support the ecosystem? Do we invest in the currency? And we sort of felt that we felt like taking a bet on the currency, but also starting to help build the ecosystem around it, and that they were, it made sense to sort of place both bets. I think Tyler was leaning a little more towards the currency. I convinced him that we should go into the, look at companies, and we both agree that we'd sort of do a little bit of both.
And we do have, as in the title for this conference, we have Gold Rush or Fool's Gold. So does anybody on the panel think that this is Fool's Gold? Who's skeptical?
I think it's a rush. I agree.
Susan, do you want to make the case that it's fool's gold?
Well, I'd just say on the, as I said in the framing discussion, I think that if you want to think about the conversion rate between dollars and Bitcoins, that's got to be sort of proportional to the number of transactions on the system. And so, if Chris over here is very successful, the number of transactions on Bitcoin could fall. If there's some regulatory problem in getting money in and out, things like that. So basically anything that causes, the volume of transactions on the system to fall would cause the price of a Bitcoin to fall. And so I don't think there's any particular magic that says that we're going to keep doing the same volume of transactions on Bitcoin today as we will in the future. You might think that it's going to grow a lot if you believe that it's a great way to do frictionless commerce. But there's no reason to think it's all going to be concentrated on Bitcoin, even if you believe in frictionless commerce. So I think the price of Bitcoin now seems, fairly reasonable if you think that this volume of transactions is going to maintain.
And do you guys think that Bitcoin is going to be a currency, or is it going to be a commodity? A lot of people do refer to it as digital gold because there's a set amount that's being created. It's being literally mined on the internet. What do you think the future of it is?
I guess I'd just like to generally point out that again, these currencies are only worth, in my opinion, as much as the rails, the fundamental properties of the rails that they are built on. So going back to why gold is valuable, it was seen, at least and still is today, as having some value for creating things as stupid as jewelry. Sorry for those who think jewelry
Very
is
shiny.
or in modern days, electronic components, whatever. You jump to fiat currencies; they're backed by governments in one way or another. There's obviously some fine lines around that. But here, the sort of radical thought shift is the currency is really just as valuable. Again, and I love the way this has been framed, as being valuable because of its fundamental properties and being able to facilitate more efficient payments. In that sense, yeah, it does have some properties of a commodity, whatever iteration you're looking at, because there is a limited quantity and they all are deflationary. That said, I think putting the label of commodity on it, while accurate for those reasons, generally comes with connotations that are not the central point here. The central point is the system around the currency. It's not the currency itself as a commodity, as something that is to simply be held.
Wendy, there's a question for you. Just what the challenges are right now in offering banking services to Bitcoin startups.
That's a good question. I think the challenges, I don't know if there's a lot of challenges. I'm thinking back when we dealt with our companies, is really understanding the business model. That was probably the biggest challenge. There wasn't any guidance out there. What is this animal? Can we peg point it to any of the regulations we have? So a lot of the unknown was really sitting down with our clients or prospects at that time and really trying to understand what their business model is. And I think that has helped our bank in really understanding the space. We're still trying to understand it. We're trying to figure out, is there an underwriting criteria? If we decide that this is the space that we want to operate in because all our venture capitalists want to go in this direction, what are the minimum criteria that we need? So we have a lot of good clients right now in our portfolio. We're using those as our best practice and helping us navigate through these waters. But
in talking about reasons for using Bitcoin, a lot of them are for basically people that are in underdeveloped banking systems. So do you see Bitcoin as, or Bitcoin startups or virtual currencies as a play in the US, or is this more looking abroad, looking to basically like third world countries, places with really unstable currencies?
I mean, I think there's a big play. If you think of a Bitcoin address as an email address that can send and receive money, then it's effectively a bank account. In America alone, there's 60 million people who are unbanked, and that number's got to be a lot greater in the rest of the world. So with a Bitcoin address, you can effectively bank the world. So those kind of promises and potential, just like Fred was saying, are kind of the things that I like to focus on, and how it's a force for a better world.
I think that we were talking a little bit earlier, I think you asked the question, why would people in this room use Bitcoin? And I think potentially the arguments are a lot more compelling in developing countries, or countries where there's just extreme fiscal mismanagement or major issues. So I think in the U.S. right now, it's probably a much larger proportion represents a much larger proportion of transactions than potentially a couple years from now. I think I could see a sort of a scenario of the world where in the U.S. is really kind of a minority of number of transactions, whether it's Bitcoin or Ripple or all virtual currencies combined, and it really takes off in other parts of the world. But we'll have to see how that goes.
Yeah, even if it's not used primarily in the U.S. as a payment system, the U.S. will benefit hugely. I mean, look at how much global e-commerce comes out of the U.S. And think about all the interactions we have, all the stuff we buy from China, for example. But think about how little interaction you actually have with Chinese entrepreneurs on a one-to-one basis. Think about how hard it is for people in Africa to buy Google AdWords. It's really hard. And so if you sort of open this up to all these places that have difficulty making payments, the U.S. will hugely benefit just by the nature of its position in e-commerce.
One thing that surprised me when I was living my week on Bitcoin is that I got a bunch of Bitcoin tips from people. At first they started like just kind of trickling in. It was like 0.01 Bitcoin, and it just grew over the week. And I ended up getting something like $1,500 worth of Bitcoins over the week just from people who supported the project. And there are a lot of nonprofits out there that have been very successful in terms of accepting Bitcoin donations. The Internet Archive has gotten something like $35,000, I think, in donations. EFF received over $100,000 in Bitcoin donations. What role do you see Bitcoin playing, or virtual currencies playing, in kind of the nonprofit social space?
I think it's huge. I think what will inevitably happen in any of these digital currencies which are successful is you'll have people sitting on massive capital gains. That's certainly true in Bitcoin, and if there is a next version of Bitcoin that becomes extremely successful, the same will be true. All of a sudden, charities can accept these, whatever virtual currency it may be at the moment, Bitcoin, and those contributing won't have to pay capital gains as an appreciated asset. So I think there's actually an enormous opportunity around this, not only in that you drop let's say you drop a donate Bitcoin button on your site, all of a sudden you can very easily through one payment method accept donations from all over the world. You can accept them in an area where there's likely to be large tax efficiencies gained as well.
You just need a crowdfunding company like Indiegogo or Kickstarter to start accepting Bitcoin, and sky's the limit.
Yeah, I think you capture a huge segment of people who want to give, and maybe they want to do small amounts. I think that's sort of a huge implication, and then that factors into the ability to send micropayments, but also the rails in terms of getting that money to places in need fairly instantaneously. So if you think of like the Asian tsunami that occurred right around Christmas in 2005, it was probably, I imagine it was very difficult to get aid and money over there very immediately. And I think that the rails that are being set up by these digital currencies enable us to really help these black swan events and avoid all the friction and pain points and wiring and dealing with different governments and currencies or this or that, and just getting it to the place immediately and reducing the cost and overhead associated with that.
So a lot of questions are about just kind of how the virtual currency space is going to evolve into like a more traditional banking space. So a lot of people are just asking, how will Bitcoin evolve? Will there be Bitcoin credit cards? Will there be lending and saving in a Bitcoin community, in a Bitcoin space? What do you think that looks like?
Yeah, so I sort of alluded to that a bit earlier and what could happen 5 years down the road with Coinbase. I think all those things are very possible to develop. It obviously presents a radical shift to banking as we now know it, given that in the Bitcoin world, all you need to be your own bank is your own password, and that's it. I think it's inevitable that if there are large enough capital pools swimming around in Bitcoin, that all of these functions will be built on top of it. Frankly, I'm surprised that there isn't already, given the focus on the exchange space, there isn't sort of a more developed derivatives or futures market around this stuff. But in my mind, it's sort of all in the pipeline.
So we're gonna finish up here. Thanks everyone for great questions. I'm sorry I didn't get to ask them all. I'm sure members of the panel will stay up here if you want to ask them some final questions. But just to close, you know, I wanted to ask, like, when do you think, you know, I'm going to be able to go home and tell my grandmother about Bitcoin and she'll know what it is as soon as I say it? Like, how soon does Bitcoin or virtual currency really reach that level of knowledge or awareness?
I thought you were going to ask us what we think the price is going to be like in a year.
Oh gosh, you can give me your bets on that too.
I think the awareness is pretty large right now. I think most people know what digital, or have heard of Bitcoin or digital currency. So I think it could be sooner than people imagine.
And where do you think Bitcoin is going to be? What is it going to be valued at a year from today?
I mean, if you draw a line from where it started and where it is today, I think it's gone up like 4x each year. So you could argue it's going to be $400, $500 a year from now, but it's anybody's guess.
No one else is
I
willing
don't
to
give
wager?
investment advice.
Possible to handicap that.
Thanks, guys. Do you want to wrap it up?
Yeah, great. Well, thank you very much, Kashmir. Great moderating. And once again, thanks to the panelists. I think this was a very, very interesting discussion. And I think once in a while at VLab, we kind of get a sense that there's an inflection point. And I think getting everybody on the panel tonight, you kind of felt that there is an inflection point with math-based currencies. And so it should be a very, very interesting future.